Hey, Yassine from Change Wealth here to talk to you today about what is interest in a financial context. Not interest, the thing you have to fake when someone's telling you a boring story, but interest in a financial context. You'll hear about high interest credit cards or low interest mortgages or those sorts of things, interest rates being raised or lowered, that kind of thing. Interest in a financial context is simply the cost of borrowing money, period, right? So if you borrow a house, that's a house, looks like a mushroom, but it's a house. You borrow a house, like you rent an apartment or something like that, or you borrow a car, the price you're going to pay for that is called rent. I think I said it a second ago about renting an apartment. So when we borrow a thing from somebody, in order to compensate them for the service of lending us that thing, we pay them rent, right? But if we borrow money from a bank or from another person or something, the price that we'll pay for the service of borrowing that money is called interest. Think of it like renting money, right? So if you go to the bank and you borrow $100, for example, and the interest rate on that loan is 5%, typically that's quoted per year. That's one thing to note that's important. So if you borrow $100 for a year, then after a year, just like you would return the car at the end of the time that you're renting the car for, at the end of the year, you might pay back that $100, plus you're going to owe the actual price of borrowing that money, which if it was 5%, that's basically calculated as a percentage of the amount that you borrowed, of course. So 100 plus $5 means the amount that you'd actually pay back is 105. So the difference between what you pay back and what you borrowed is the cost of borrowing that money, the price that you're paying the lender for the privilege of borrowing their money for a period of time, and that is called interest. Hopefully this was helpful, and we'll talk to you again next time. Thanks.